All right, everybody, welcome back for another community class. I am so excited to have my friend Bob with us today. Bob, welcome. And by the way, I got to mention, I really enjoy your podcast as a listener, and I've also had the opportunity to be on your show, Money You Should Ask. Great show. But anyway, welcome here today. Really excited to have you with us.
Alex, excited to be here. Love all that you do. And hey, you're one of our best guests. What can I say? Love to have you back.
Thank you for that. Appreciate that. I have to ask, do you have a virtual background right now, or is that's actually behind you? It's like
that is actually really happening. The fish are really trying to escape, but
okay.
There's a big orange one that's been there for 20 years.
Wow, very cool.
Moved through 4 offices, but he's there.
That's amazing. Very cool. Well, today I'm really excited to dive in to this conversation with you because we're going to be talking about how podcast guests or hosts can save some money on their taxes. What are some things we can do to write off and things like that? Real quick, before we do that, can you give us a little bit of your background just so we kind of know why you're talking about this and it's not somebody else?
Absolutely. I'm a singer. Oh, wait, no, sorry.
Something tells me that's not quite true.
That's not quite true. Yeah, so I'm a CPA. I have an accounting practice. I brought on a partner a couple of years ago. We've got about 1,000 clients. We work with people mostly in the entertainment world, but also manufacturing, therapists, and anything under the sun. I also have a background in therapy, and so I do work with people. I'm licensed in somatic therapy, so sort of married the emotions and money together, which hence Money You Should Ask and the website The Money Nerve. Work with people and trying to figure out their money beliefs, money blocks, and all that stuff to help have a better tax picture and a better financial picture. I in the past have done stand-up comedy, which is how I came to be the CFO at the world famous Comedy Store. It wasn't based on my comedy, but basically Mitzi knew that I was a CPA and called me up and said, hey, we're in some trouble here with our payroll taxes, help us out. And 25 years later, I'm still at the Comedy Store helping them out as well. And I started my first podcast about 5 years ago. That one's been off the air, but since is still gaining ground. So people hang with your podcast because it doesn't happen overnight. And I've been doing this podcast. We're on 150 something episodes. And so that's my background. I've been in the trenches. I work with people in the trenches. We work on ways to not give too much money to Uncle Sam if possible.
It's great. That's why we're here today. Bob, I have to say, when I started looking for a CPA to talk about this, I literally was looking for what I said to be like not just a normal CPA. And I saw your tagline is not your average CPA. I'm like, well, that's what I'm looking for. But what really drew me to you specifically was some of this just diverse background, but also the fact that you've been on both sides of the mic quite a bit. So you have an idea of what podcasters deal with, what kind of money is involved in it. And because of that, I had a pretty good hunch that you'd be able to kind of help us out along the way with what is something we can write off, what's something that we can't write off, like what we can look at. First off, I just want to go ahead and ask, I think the best place to start is in order for us to have any form of write-off, do we need to create a company like an actual LLC or incorporate as a podcast host with a show or as a guest? Like where is the starting line for this type of thing?
Absolutely. That's a great question. And for most people, I say start with a Schedule C. So a Schedule C is a sole proprietor business. And what that does is it lets you pick up any income where they don't withhold taxes. So it's not a W-2, a 1099, somebody gives you $100. That's going to go on that Schedule C as income. And then you're going to pick up the expenses there. So currently under the current tax law, a lot of people think, oh, I can't deduct anything. Well, that's true if you're itemizing and you've got W-2 income. But if you have a sole proprietorship, a Schedule C, you can actually deduct your expenses. Now, if you are deducting $50,000 a year in expenses and you have zero income, after a while, the IRS might say, we think that might be a hobby. That might actually not be a business. You're not actually generating anything. And in that case, you don't get to take hobby losses. But if you've got a business plan, if you've got things in motion that appear to be a business, having a business license. I had a client that had $100,000 of losses 2 years in a row. But when I showed the IRS the license and the insurance, they gave all the deductions because they saw that she really did have a plan. She just hadn't gotten there yet. So with a Schedule C, that's where you're going to write off your stuff software, mileage, internet, equipment, and all those things with the pretense that at some point I'm going to be making some money, even if I'm not making a profit.
So what you're talking about there, I like this idea of a Schedule C. And you're talking about like a hobby or a business because there has to be some sort of plan involved and some idea for profitability. If at first, especially like maybe the first 3 years, let's say that you are spending more than you're making, is that okay? Or is that going to become quickly a red flag?
It's going to be okay. Now, sometimes the IRS might just pick you out and say you look like a favorite person to check with.
Of course.
And they might audit you. If you've got that information together, you've got a business plan and all these different things, they will typically back down. There's a story is in the continuing education of accounting, exciting accounting courses, where this guy had losses for 10, 15 years. And it went to the tax court because the IRS said it's a hobby. And the tax court argued and agreed with the taxpayer, who said, look, just because I'm a terrible business person doesn't mean I didn't intend to be in business. He had a business plan. He had paid for it. He had everything that showed that he was really with the intention to be in business. So that's really something that's important is this a hobby or do I intend to make money at this?
So along with this Schedule C, what are the other things that you're talking about that we need? Like just kind of itemize those things for us real quick of like, hey, if you want to do this and call it a business that hopefully will make money at some point, like what is the list of things that we need? Once again, you've already kind of covered, but I want to make sure we've really got that.
So the main thing that you want to have is you want to have that business license, city business license. Most cities require that. And even if you've got no income, even in the city of LA, the first 100,000 is exempt, but you still have to fill out the paperwork. That form goes a long way. If you've got people working for you, if you've got people coming in your studio, you might want to have workers' comp insurance, or you might want to have some liability insurance. Again, that's going to really support the fact that you've got a business, that you're actually paying for that stuff. If you've got product you're selling, you'd want to register and get a sales permit and get a resale number so that you've got to pay the sales tax on those items, unless you're selling through Amazon where they might be collecting the tax. Those are the main things. If you've got a business plan that somebody helped you set up, that also supports the fact that you're in business. If they can go and actually see that you've got several podcasts and that there's sponsors or there's affiliate marketing and that you're doing these different things, that again is going to support the fact that you're actually trying to create a business or creating a business.
Love this so far. I want to transition here in a moment, but real quick, I want to ask, do you have an idea of like an estimate of how much kind of this basic costs, like this whole basic setup with the Schedule C business license, potentially a business plan as well? Do you have any idea what someone's looking at spending to do that?
So a city license is going to cost you anywhere from $0 to maybe $150. So that's not very expensive. Insurance, liability insurance or workers' comp, that may cost you $500 to a couple of grand. So I wouldn't jump on those immediately unless I knew that there was some exposure. And a business plan, you know, if you've got a friend or you can pull one off the internet and sort of jazz it up and customize it to yourself, that is sort of free. Doesn't have to be anything fancy. You don't really need a whole lot of money to get started, but I think having that city license, it saved me in a few audits to being able to say they actually had the intention because they went out and did it, even though it didn't cost them anything.
Okay, that makes sense. And if you're at home, it's just you maybe by yourself, or perhaps you have a VA that's somebody who's not anywhere near you, but you're doing all this from home, would you still think that insurance is something that you should have along with that?
Probably not. So for me, I want to start making money before I start. I mean, I want to take care of the basics, but I don't want to be going out and saying, let me spend $50,000 to have this amazing setup and then have it not go anywhere. I'd rather make some money, spend a little extra to clean everything up and get that going. But the liability insurance, things like that, they're great to have. They're not absolutely necessary, but I think as you start to have more exposure, you want to have that stuff on hand.
It's a good point. I really like what you said there. Like instead of going for the ideal setup, because you could spend 50 grand and have like the most like impossible to penetrate legal plan, tax plan. But if you're not making money, then why did you spend all that up front? Like you're saying, just spend a little bit extra when you get there and when you actually need it. I've never heard a CPA give that advice, so I actually really respect that about you. That was great.
Well, I had a client that spent $30,000 on setting up 3 S corps and doing all this stuff. And great, we had we had all the write-offs for the next few years because it never went anywhere. And it was just wasted money. I'd rather see you spend it on resource.
100%. I'm glad you mentioned that. So to transition a little bit here, if we are doing this stuff from home, right? Like we've got our home studio set up like I have, or just at least a mic and some sort of webcam that's set up. If that's what we're working with right now, and we've got this thing as a C corp or some sort of legalized business, right? We've got our plan. What in our house can we actually write off to be part of the business? Because I think this is kind of like an aha moment for many people. Like when I learned some of these tactics, which I'm still learning them, hopefully going to learn some more today, I was like, no way, I didn't know I could write this stuff off. So what are some things that we can start doing that's kind of like low hanging fruit for us to save some cash on the taxes?
Absolutely. So if you're a C corp or if you're an S corp, then you're going to get these deductions whether or not you're having a profit. And a Schedule C, I'll talk about that. But if you're renting your place, then you may be able to take a portion of the rent. If you've got a dedicated area, that's not just the couch in the living room, but a separate space, you would be able to take a portion of the rent based on the square footage. You'd be able to take a portion of the utilities. You'd be able to take a portion of the internet, which you might already be taking anyway, because maybe you just have the internet for the business anyway. And so if you've got furniture that you've never written off as a business, or somebody gives you a computer that was gifted to you, you can still write those off as business expenses for the fair market value if you've never taken them as a deduction before. Now, with home office and all of that, if you're on a Schedule C and you don't show a profit, you don't get to take the deduction until you show a profit, and it just carries forward. On an S corp and a C corp, you're going to get that deduction on that tax return. Again, on a C corp, which doesn't go anywhere onto your personal return, that's just going to sit on the C corp until you have a profit or reduce your income. On an S corp, that loss, if you run it at a loss, is going to pass through and offset your W-2 income or other income that you might have.
Very interesting. I didn't actually know about if you're renting a place, you could potentially write off part of that. And I know it's supposed to be the area that you're using for podcasting specifically.
Right.
And there it's got to be able to hold up, right? Like if the IRS was to come in and say, like, where is it? It can't be on your living room couch or next to a TV. Would you actually recommend creating like an office for it in like an extra bedroom type of thing? Like what kind of is considered enough to pass as something you can write off?
Well, I know some clients have built a little soundproof studio in a closet or in a bedroom. That clearly counts because that's not something you would normally have in a bedroom or in a closet. I do think it's good to have something, but at the end of the day, if you don't, you're going to get a little bit of notice before they come to visit you with the audit. So maybe you just do a rearranging before they show up. I didn't say that, but no, it's good to have a space, but your kitchen, your bathroom, they don't count, even if you do some of your best work there. That's not where they're looking. Reasonable.
Right. Yeah, no, that's a good point. I like that. Very interesting there. Before we move too far past, I want to make sure, did I miss any points in this? And I want to leave a lot of time today for Q&A. So I don't want to take up too much time with just you and me chatting before we end the recording and open up to everybody. But is there anything I missed when I'm talking about in the home type of thing?
The only other thing I didn't mention was mortgage interest. And so you can deduct mortgage interest if you own your home. And the main reason we do that is because we're running at a profit, and the mortgage interest is going to reduce our self-employment tax, right? So if I've got a Schedule C and I have a $10,000 profit, I'm going to pay $1,500 in self-employment tax. And that mortgage interest, I'm either going to take it on a Schedule A or I'm going to take it on my home office against my Schedule C. I'm not going to get extra. It's just being strategic to reduce that self-employment tax if that's occurring.
Interesting stuff. Bob, you clearly know what you're talking about here. I appreciate it. I've got like a ton of notes for myself here. Now, I want to transition one more part of this conversation here is to talk about using a CPA versus just doing your taxes yourself, because a lot of this stuff is difficult to understand, at least for me. Maybe some of the people attending here today can just totally grasp all this. For me, I think it makes more sense to work with a CPA, but some people say, why spend the extra money? I'd love to hear what you say as a CPA. Obviously, you'll be a little bit biased here, but I'd just like to hear how you think you could potentially help podcasters in this way.
So I get the piece about not wanting to spend the money. And I definitely think it's worth spending the money, at least maybe the first initial year, so that you have something to model. I think it's worth having that sit down with a CPA or somebody that's worked on these kinds of taxes to tell you this is a Schedule C. This is the way that it needs to work. I recently had somebody come to me saying, I'm getting all these notices. I have an LLC and I'm getting all these notices. I did the last 3 on my own. I dropped my CPA, didn't want to pay for it. Realized that they were an S Corp. They were an LLC acting as an S Corp. And when they took it over to do it themselves, they just started filing on a Schedule C on their personal, didn't file any of the business returns. And now the IRS and the state are saying, where's all the business returns? You used to file them. So now they've got a huge penalty, late filings, and all kinds of stuff because they wanted to save a few bucks. I think initially having somebody to help you set up the structure and tell you, yep, Schedule C, that's the way to go. No, I'd go with an S Corp election. And here's why. At least you have something to model. And I've helped clients do that. I get them going the first year or two, and then they're sophisticated enough that they can manage it on their own. And maybe they'll check in every couple of years and go, hey, how's it looking? But there are some people that can absolutely go out and do that. And it's not necessary to pay an accountant. But I think initially having those folks on your team and setting it up right from the beginning is really the better way to go.
Bob, once again, not your average CPA. I've never heard that from anybody who said like, yeah, it's just your first year, right? Like, obviously it's great to stay with it. And I think that, like, for me, I've been using a CPA for years. I could not imagine going back to doing that myself, but I love the advice that you're giving here today. I think it's actually very beneficial. Now, because I don't know what I don't know, is there anything that you feel I've kind of missed here that you want to fill in before we end the recording as far as like any gaps I've made?
Well, I think the biggest mistake people make is relying on what their friend's friend told them. Or, my dog said, and so all of a sudden they're not giving me expenses, right? And so all of a sudden, 2 years later, I find out, wait a minute, you've got a kid? That's a deduction. Wait a minute, you didn't write off your computer. What I say to people is if you're not sure if it's a business expense or if it's deductible for taxes, make a note of it, write it down. The worst somebody can say is we can't deduct that. But if you don't put it down, I don't know about it and I can't help you with it. And it may even lead to other questions that help us find more expenses. So if you're not sure, write it down. If you're terrible with keeping a ledger or using a bookkeeping service, anything like that, get 12 envelopes, big yellow envelopes, write on them supplies, telephone, internet, car, and just throw them in the envelope so that at least at the end of the year, you can say, this is all the car stuff. It's a lot easier for an accountant or a tax preparer to just total up the numbers that are all in the one envelope instead of uncrinkling a grocery bag worth of receipts that nobody can read half of them. And, your pet food is not, your dog is not a mascot for the company. All those things aren't deductible. Don't make me go through it. Organize it. And I think that really helps the preparer out quite a bit.
Love it, Bob. This has been so valuable. I'm getting ready to open up Q&A for everybody, but I want to just quickly say thank you so much. And where can everybody find you if they're looking for you?
The best way to find me is themoneynerve.com because that has my CPA practice information. It has my podcast information, and it's got resources for finances and healthy relationships with finance and all that. So that's the best place to find me. But Wheeler BI is the name of my CPA firm. And my partner, so you could find me under wheelerbcpa.com as well.
Great. Well, Bob, thank you so much for being here again. Really appreciate it.
Sure.